All right, let's look at section 13.5, which deals with stocks, bonds, and mutual funds. We're really not going to do the objectives on evaluating investment returns or trying to build a nest egg. All right, so stocks, buying stock in a corporation makes you a part owner. You share in any profits the company makes, and this share of the profits is called a dividend. Okay. And then the profit that you make when you sell for more than you paid is called a capital gain. A capital gain. All right. You can have a loss, a negative gain, which would be a capital loss. And that happens if you sell for less than you paid. So you can make money or lose money when you sell, depending upon how much the stock is valued at the time of the sale as compared to how much you paid for it at the start. All right, by return on investment, we mean the difference between what you receive, and that includes dividends, okay? And so when you sell it, the capital gain that you make, and then also any dividends you earned, and then you would subtract from that what you paid, which would be the purchase price and any other fees associated with buying and selling the stock, like commission you must pay to the broker. Okay? The price of a share of a stock is determined by supply and demand at institutions called stock exchanges. So like NASDAQ, things like that, stock exchanges. Okay. So here's a question. So suppose we're going to buy 100 shares of stock in company X. And at that time, we're paying $28.50 per share. And then a year later, we receive a dividend of 60 cents per share. And the stock price had risen to $29.75 per share. Okay. So what was the cost of the stock? Okay, so let's think about that. So we're buying 100 shares and the cost was $28.50. So the total cost would be 100 times the $28.50. Okay, so that's going to be $2,850. Okay. Now the dividend amount, we have 100 shares and the dividend amount was 60 cents per share. Okay. So we can multiply 100 by 60 and that turns out to be 100 by 60 cents and that turns out to be $60. 100 times 0.60 would be $60. Okay. So if we sold the stock, okay, let's see what we would get when we sold it. So we have 100 shares we're selling, and the selling price would be $29.75. So if we sold it after 1 year, then we would sell it for $2,975. Okay. All right, now that's not the capital gain. That's just the amount we would get for selling it. To get the capital gain, I need to take that $29.75 and subtract the $28.50 from it, the amount I paid for the stock, and that change is a positive $125. So this right here, $125, that would be the capital gain. And I would pay taxes on that, by the way. So that's my capital gain. All right, so the total return on the investment would wind up being that capital gain amount plus the $60 in dividends, okay, which is $185. And then had there been some costs involved in the sale of the stock, I would have to consider that as well. But we weren't given any information about that. So that $185 would be the total return on the investment. Okay. And then they asked us also to get the percentage return. Okay. So to do that, we could take that 185 as compared to the original purchase price. So the percentage return for the 1 year ownership of this stock, we could take 185 divided by 2850 and we get 0.0649, or about a 6.5% return on our investment in that 1 year. Okay. All right. So let's go on and look at trying to read a stock table. Okay. So stock tables can look different from this, but they generally give you enough information up here in the headings that you can figure out what each of these things are. So 3.5, that was telling you that the stock increased 3.5% so far this calendar year. Gives you the highest and the lowest price of the stock in the last 52 weeks. Okay. All right, then we have the name of the stock, and a lot of times it'll be just those 3 letters that you'll see. They used to publish this in the newspaper, and we don't do that anymore. All right, then here, this is a yield. YTD is year to date. YLD probably stands for yield. Okay, so this is telling you that the company pays 53 cents, which is a 2.8% yield on the price of the stock. And 35 that you see right there, the PE, that's the price to earnings ratio. It's the stock price divided by the earnings per share over the last 12 months. Okay. Now this one, you get questions on this sometimes. This next place, the volume in hundreds, that tells you how many shares were sold. So on this particular day, 1411 means that 1411 times 1,000, let me say that correctly, 1411 times 100, so 141,100 shares were sold that day. Okay. And then here you have the closing price of the stock that day, which was $18.79. Okay. And then the net change. So it was 3 cents higher than that of the previous trading day. Okay. All right. So some of the questions in homework is just going to ask you to read a stock table, to tell me what is the volume or what would be the cost at closing, that kind of thing. All right, let's go ahead and take a look at a little more related to stocks. Okay. All right, so stocks, people who invest in stocks sometimes have brokers that help them to execute the purchases and maybe even give them advice on what to buy or sell. So there are full service brokers who are going to do some research and make recommendations and offer other services, like advising you on investments in total or retirement or tax issues. All right. And then there are discount brokers who maybe don't offer all that advice, but they might just help you make buy stock and sell it, and maybe provide some information to you so you can make a good decision, but they don't typically make specific recommendations. Okay. So the brokers, if you do use a broker, they're going to have to make money somehow. And what'll happen, these brokerage firms will charge a commission. That'll be the broker's fee. So this is on top of what you have to pay for your stock. So there'll be a broker's fee for executing an order. All right. So for full service brokers, it says that the commissions are typically a percentage of the value of the purchase or sale. Okay. So all total, how much stock you buy, maybe it's between 1% and 2% of that. And then there might be additional fees if you do if you buy stock in a round lot, like a multiple of 100 or an odd lot, and that gets into some detail there that probably doesn't matter right now. All right. And then discount brokerage firms maybe don't charge special fees, but they charge different commissions depending upon like how much help they give you. All right. Whether the broker really assisted you or whether you did some kind of automated trade, like maybe you got online help, okay, or automated phone help rather than an actual broker helping you. Okay. So there might be, a chart, a commission structure, something like this. You'll see this in some of the homework problems where you have to also factor in how much you had to pay for the stock. You have to factor in the broker's fee on some of the homework problems. Okay. All right, I'm going to stop here and then do another video on bonds and mutual funds.